Hello and welcome from Trend Signal for our review of the data and events, the week beginning the 1st of December. A new week and a new month. As we start the week, the markets are under pressure from a continued, if not an acceleration in the slump in global commodity prices. The resource currencies are under pressure with oil. Mining companies in the UK also taking a hit. Some of the big mining companies on Monday morning down quite sharply. Events in Hong Kong have not helped either, where we already had a fairly weak Far East markets. Protests have become most intense and violent they've been in the last 10 weeks. So we have quite a busy week this week, following on from the shortened Thanksgiving week of last week. As we have the first Friday in the new month, that always signals the release of the US unemployment data, referred to as non-farm payroll, and many more releases as well this week in what is the, as I said, the busiest week of the month for data. Last week, the markets, it's quite interesting actually, the indices didn't really do a whole heap. The FTSE was off just 29 points, 30 points, just under 0.5%. The US markets, S&P 500, that managed to eke out a 4-point gain. We had an early closing on Wednesday last week. We were shut on Thursday for Thanksgiving, and then an early closing on Friday as well for Black Friday. The Dow Jones, that was unchanged, but our DAX, European German index, actually had another good week, following on from the previous week. It was up another 134 points, or around 1.35%. Currency markets, euro, that was unchanged versus the dollar. Sterling was a little bit weaker. The yen continues to slide versus the dollar, up another 20.2 of a yen versus the US dollar. The Aussie dollar, that continues to struggle. As I said at the beginning of this piece, the resource currencies are really struggling. The Aussie dollar versus the US dollar was down 111 points or 1.1 cent. That's about 1.3%. But the big news, as I've been mentioning, is in the resource sector. Gold fell $35 last week. That's what, 3%, just under 3% already. As we speak on Monday morning, down 1% first thing. This reflects, well, partly the news over the weekend. In fact, on Sunday, Swiss voters had a referendum to decide on a number of issues, immigration being one of them, but also proposals to boost gold reserves, which was thrown out fairly overwhelmingly. So that didn't happen, which caused gold to gap down sharply first thing on Sunday night, Monday morning, and that has really set the tone in the commodity markets. Brent crude last week was down 9.3 dollars to the barrel. That's just shy of 12%. So we're at the lowest level now since October 2009. And this is really as a result of the meeting, the OPEC meeting in Vienna, where Saudi Arabia's oil minister told other OPEC members that they have to combat the US shale boom, arguing against cutting crude output in order to depress prices and undermine the profitability of North American producers. So they're not prepared to cut production. I think they're stress testing the resilience of the US shale oil industry, but they are the architects of the shale boom in the States by artificially pushing prices higher over the last 5 years, which has encouraged exploration and production in the US, where the US now is actually the largest producer of crude oil in the world now. Copper did not miss out either. Copper has fallen quite sharply as well, again hitting the lowest level since October 2009. Copper off 20 cents a pound. That's what, 6.25%. A big industrial metal. That's a real bellwether for global growth, which has sort of broken the range it's been in the last 8 weeks. And not surprisingly, when you see the slowdown happening in China, etc., just looking at some of the data already out this morning, we see the manufacturing data in China coming in a little bit weaker. We've also had data out from Purchasing Managers Index data out of Germany, where we've seen November's number hitting 49.5, signaling a contraction in the manufacturing sector in Germany. A lot out this week, and rather than hang around, let's just go straight into it. We have a number of events. Most important is the non-farm payroll or unemployment data in the States, but we've also got Australian, UK and Eurozone rate decisions to throw into the mix as well. Let's just jump to the Aussie rate, so the Reserve Bank of Australia. We're not expecting anything there, but like with all these central banks, they are all fighting deflation to a large extent. So there's very little chance of any rate change this week from any central bank. We'll get on to the Eurozone and the ECB on Thursday when I get to that. But certainly for Monday night, Tuesday morning, not expecting anything, but that obviously any things mentioned in that will affect the Aussie dollar, which is, say, already under pressure, which is something the Reserve Bank of Australia is quite happy to see as they help to support other sectors of the economy, not just the mining sector, obviously. On Wednesday, we have our first important data of the week, really, with the data on the employment situation in the States produced by ADP, which is a private company, does the employment, the payroll for big companies, and they have their own take on the non-farm employment change. That's published at 1:15, expecting a slightly weaker number from the previous month. And that's obviously factored in. Anything different from that could affect the markets. But nothing like as strong as perhaps some commentators would like to see in the US. Above 300,000 is really what's needed to enable the market to the economy to really lift up, or lift off, I should say. We then have the non-manufacturing PMI data in the States. We call it the services sector. Again, that's very, very buoyant. As you can see, anything above 50 is in expansionary mode, so a very strong non-manufacturing or services sector. On Thursday, that's the big day. Thursday and Friday are the two big days really this week. We have our own MPC voting on interest rates. Obviously, we're not expecting any change. There is a statement put out as well, not expecting any surprise there. The bigger one probably is from the Eurozone ECB. They make their announcement at 1:45, and then there's a press conference afterwards. There's oft talked about Eurozone quantitative easing. It'll be a very big surprise if anything is announced this week. Anything is possible. It would undermine the euro significantly though, but we're not expecting anything until the new year. At least that seems to be the broad consensus of QE for now. As I say, the press conference at 1:30 is when the markets are likely to react more. And then that leaves us with the lead up to the data on Friday, the non-farm employment change or US unemployment data or employment data. Non-farm, called non-farm because it excludes the more volatile and seasonally affected farming sector. Again, in keeping with the ADP data on Wednesday, we're looking for a slightly softer number, but nothing too much, not too much of a pullback. The US economy continues to outperform almost all other economies, and you think with this sharp fall in crude oil that the US consumer is going to have a little more money to spend, which, unlike in the UK where the price of diesel and petrol is more tax than anything else, we don't tend to feel too much of the benefits. In the US, that they really do feel the benefits of a weaker oil price and a lot lower gasoline prices. Anyway, that's it for now. I hope all goes well this week. We will reconvene again on Thursday at 8 o'clock. Thanks very much for listening.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.